Stocks are mixed for the day. The S&P 500 down, the NASDAQ 100 up, bonds are down, gold is up. This is Charting Wealth's daily review for Wednesday the 14th of November. Let's jump into these charts, and we always start out with the SPY, that's the S&P 500 Exchange Traded Fund. What do we see the week looking like so far? After an up week, the prior week ending the 9th of November, 2 days into this 5-day candle, the weekly candle, we have a red spinning top, means indecision, tending down. Derivative oscillators losing downward momentum. The price percent oscillator has really dropped over, going down again after pretty much going flat in the prior week. We see on the 2-day chart, it just won't cross over, going up. What happened is, it looked like we were going to have a 2-day crossover, and so far, we see the first day of this latest candle, more down move on our Heiken Ashi candlesticks. Price percent oscillator is laminated almost on that red signal line. Just below it, derivative oscillators gaining upward momentum. We'll continue to watch and see what we see there. What about the 4-hour chart? Of course, it crossed over, going down it crossed over in the afternoon, going down both in the morning and the afternoon, starting the week off on Monday. Up some in the morning and then dropped back over, heading down in the afternoon. Told you to watch for an entry point. Hopefully you at least found it in the afternoon with some of that down movement. S&P down 0.19% for the day. Remember, we've been waiting for things to peel off and head down. The thing that gives us the most concern about the S&P right now is that 2-day just laminating there. Hopefully it's going to pull away from that red signal line. Just be careful. Keep an eye on things. Remember, all the charts, all the time. Now let's go to the Qs. That's the NASDAQ 100, a much bigger red down candle, not a spinning top like the S&P, but a red down candle with a wick on the bottom. Price percent oscillator losing some downward momentum. Gaining downward momentum. The derivative oscillator is what's losing a little bit of downward momentum. That's from that 2-day candle that was the green spinning top, sort of breaking some of that momentum. So what we'll continue to watch for is hopefully more down movement. It was a bit of an up day, 0.10%. We see on the Heiken Ashi, which means average pace as far as price movement, still heading down on the 2-day chart. The derivative oscillator is flat, price percent oscillator heading down, not at the same stronger angle it had been that prior candle, but still headed down. What do we see on the 4-hour chart? Up some in the morning, down in the afternoon. Of course, hopefully you jumped in after the morning down, crossing over on the 12th. That was Monday, had a jumping in point in the afternoon. Nice things still happening. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. Hopefully you're in that trade. Practice trade and it's working for you. We'll continue to keep our eye on both our stock indexes. Now we go to bonds. Bonds, of course, confirm down move on the weekly chart. However, derivative oscillator losing downward momentum. Price percent oscillator heading up. Green open box candle. We go to the 2-day chart. What do we see? Finally, some more movement after up and down and up again. Now things seem to be moving up. We confirmed the crossover going up, of course, with the close of the candle yesterday on the 12th. And the first day of this latest 2-day candle, green up candle. Now, technically, the TLT 20-year bonds was down for the day, but again, our Heiken Ashi candlestick pushing through the red signal line, the weekly trend line. We go to the 4-hour chart. What do we see there? You can see where that peel-off occurred. We saw some down movement in the morning, bit of a recovery in the afternoon. We still ended above on that 4-hour chart, the down trend line on the weekly, and we'll continue to keep our eye on things. Derivative oscillator losing momentum, but that price percent oscillator is heading up. So we'll just continue to see how things track out. We don't have a trade at this time, of course, because the weekly's down, the 2 days up. We'll just continue to follow things and see what we see what shapes up. Now we go to our last chart. Gold. Of course, we were hoping gold had bottomed out somewhere around that 112.63 range. It went up, of course, for 3 weeks, then sideways for a week or so and down going into the second week. and we see the derivative oscillator losing lots of momentum after things peaked on the derivative oscillator the week ending the 2nd of November. The price percent oscillator is also heading down now on that weekly chart, still in a confirmed up move. What do we see on the 2-day chart? Well, of course, it crossed over on the 12th, the 2-day candle ending the 12th of November, and so far we've got a down candle forming on the 2-day chart. Now, for the record, regular charts, of course, this is a Heikin Ashi candlestick. If you don't understand how those are calculated, they're really accurate in helping us track average pace. That's what Heikin Ashi means. Please take the training that'll be available at the end of the program today. I'll put it up there. You can also find it at the website, chartingwealth.com, and at our YouTube channel. And please subscribe at both. You'll get our newsletter in your mailbox every day that includes this training and all the other special stuff we put out. Links to our books, to our Patreon page, to our daily market, weekly market, and trade worksheets, everything you need. So what do we see on the 2-day chart? We see down movement heating up, and of course the price percent oscillator heading down, derivative oscillator gaining downward momentum. And then we look at the 4-hour chart. What do we see there? Well, we're watching that 4-hour chart, and again, is it possible that it is sort of hitting a down movement? It's tracked along the same point, about 113.50 or so. Looks like the derivative oscillator's lost a little bit of downward momentum. That price percent oscillator is still heading down. And of course, we need to get rid of our trend line, confusing, going up on the 2-day. 2-day is in a confirmed down move. The weekly in a confirmed up move. We don't have a trade on gold. We're waiting to see what's going to happen. Is gold going to bottom out again and start moving up? Or is it just going to continue to trek down, down, down? We'll wait. We will see. Remember, the charts show us what to do. We are trend followers, and only when we have fully established trends on the 2-day and the weekly, then, of course, we get that 4-hour chart pulling back and moving in the right direction of the larger trends. That's when we trust our trend so much more and can jump in and see success in our practice trades. You want to know more about what we do? Lots of great material at the website. If you appreciate what we do, of course, you can buy our book. You can find links in the show notes. And always, you can support us on the Patreon page. And we appreciate the folks that are supporting us every month at both the entry level, the interim level, and we're still waiting for the advanced level. We appreciate it. We're going to be having all that special training going out. If you're in the intermediate level, don't forget, you get a 15-minute once a month call where we help you personally direct your training and what you're up to. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.